Yo guys, it's M Capitals. Now we're going over like another video today. Now this one was actually, I got a lot of DMs about this. Now everyone wants to know what liquidity sweep is, right? Now what is the whole purpose of it? Now I've got like great examples I want to show you guys as well. So first of all, for me, my definition of obviously a liquidity sweep is price moves with speed. Now what do I mean by this? When price obviously creates highs and lows, price potentially moves with speed in one direction to grab those highs and in order to move to the lows. Second of all, obviously, I've explained it pretty much in the first one. Price targets session highs or lows and quickly runs in the opposite direction. Now, the key element is time, okay? Now, once again, guys, if this video is useful, just make sure you guys like, comment, and subscribe. Let me know your thoughts on this as well. Okay, perfect. So, first of all, we're going to go straight up into a nice little video right here. Let me get my charts. So right here, this to me is a liquidity sweep. So you see how you had old highs right here. You had old highs right here, price swept it, and it moved in the opposite direction. You had lows right here, which price obviously swept, moved in the opposite direction. Same thing, price had highs right here. As price grabbed it, we've shifted pretty much in the opposite direction as well. So price does this pretty much every single time. Now with that being said, right, that's all price does. Price targets old lows, old highs. For example, in this instance, you can see that this low was pretty much a key low. The moment this low got grabbed, price then moved up in the opposite direction, which is all the way, pretty much shifted all the way. This was like actually a quarterly shift during March as well, so beginning of Q1 in 2023. Now a small other example is right here. As price swept these highs, what happened? Price wicked up, grabbing more areas of liquidity and quickly shifting down in direction. So you notice how these liquidity grabs happen so quickly. The reason why price actually does that as well, with let's say for example above old highs, price does something like this. Let's say this is an old high, price will then run above it and come straight back down. The reason why is there is a lot of traders. First of all, is to grab liquidity from here. Second of all, it catches out breakout traders where they target a short amount of pips and they quickly get stopped out, as you guys can see. So for example, if I was to be a buyer right here, as you can see, I would get stopped out because this move happens so quickly, right, that they don't even know what hit them. So now we're going to go in with the key factor of time as well. Once again, it's the same thing that happened here. Now, what do I mean by time? Whenever you trade, right, the algorithm pretty much moves with time. So if you don't know how to trade with time, you don't know exactly what you're doing because time is a key factor within trading, right? Now I'm going to show you guys. As you guys can see right here, you had a surge of liquidity right here. So as the Monday has now pushed up extremely with speed, the reason why is we're targeting this area of fair value gap. Now, when price pushes up with speed, right, we're also leaving inefficiencies within the market such as fair value gaps, imbalances, areas of equal lows, and obviously equal lows once again around here. Now, what happens? As you guys can see right here, the moment that price runs out of Asian session, right? Now, my Asian session is pretty much till 7 a.m. I prefer it this way. The moment price runs above these highs, the 8 a.m. London, this is where liquidity kicks in. Price has swept these Asian highs by about roughly 14 pips. Now, during this session where an order block is now created within a kill zone hour, it will most likely hold. So now if you was to, let's say, trade this, and you was to obviously put your entry here and stop loss above these highs, or if you would have spotted that liquidity sweep earlier, you could have pretty much had your highs right here. Even if you targeted these lows, that's an amazing 1 to 3. You know, just targeting the areas, these little liquidity beneath this Asian lows. So now when you're combining, you know, liquidity grabs with obviously time and price, this is where, you know, you'll make like a lot of money because this is where you hit those RR trades, those risk reward trades, because you're targeting pretty much, you're grabbing those liquidity sweeps in order. So this right here is a liquidity sweep. That got grabbed. Price now is moving, targeting the Monday's inefficiencies that got created within the markets. Now, for example, if I let price run, where are we targeting? We're pretty much targeting these little lows right here. Now that that got grabbed as well, let's see what happened here. If I go back onto a 5-minute time frame, because price has now dropped down by so much on an hourly time frame, if I go on it, you can see how much price has shot down by. We're also now in an area of a key order block, right? We've swept all these lows as well right here. So now price could potentially move up higher to fill in any inefficiencies left that price when price dropped down. We now go up, we go into our 5-minute time frame. This is the key low that was holding. The reason why I was holding so much is because I want you guys to pretty much view this as like an area of support, right? I don't think the pink is going nasty with the pink highlighter. Was price obviously got swept by about, let me see, by about 7-8 pips. You can see how the last sweep was right beneath this little low. It was a very small one. This is to obviously catch out the early little buyers who will obviously quickly then go ahead and get stopped out the moment price moves in their favor, where, you know, the moment price runs up in profit, they will then move their stop loss into obviously right beneath this low, and you can see how quickly they got stopped out. Now price is obviously going to run above it, because that's what a liquidity sweep is. Price is now run through grabbed Asian liquidity, and price can now potentially go ahead and target the highs, whether you can target the Asian highs, whether you want to target a little bit more. It's completely set on you. For me personally, I have like a set 1 to 3 risk reward ratio, so I risk 10 pips to catch, let's say, 30 pips. Sometimes obviously I do let my winners run, but then again, it really depends. So as you guys can see in this, now I hope you guys obviously do understand what a liquidity sweep is. It's pretty much simple. You just have to see it within the markets. The more you practice, the more you train your eyes, it's something you'll keep on seeing over and over again.